Hello and welcome. You're tuned into the Small and Mid Cap Show. I'm Hiral Dadia and you're watching NDTV Profit. Let's quickly take a look at how markets are panning at this hour overall. If you see in terms of Nifty 50 as well, the positive momentum does continue. 0.7% higher, nearly at the day's highest levels is where Nifty is trading at, and we are above that 21,550 mark already. Good gains coming in terms of Bank Nifty as well, above the 48,000 levels, and the advanced decline ratio is absolutely in favor of the bulls. You have 42 advances versus 8 declines on Nifty 50, and names like Hindalco, Tata Steel are up in trade from the metal pack. You have Ultratech Cement also, which is seeing smart gains to the tune of almost 3%. In fact, you have a Nomura report which has come in as well on that one. Tata Motors, Bajaj Auto seeing positive momentum for a second consecutive session. In fact, the auto pack has been in focus as well, ahead of the auto sales numbers that will start trickling in the next couple of trading sessions. What is losing? NTPC is down in trade. Britannia trading under pressure, Asian Paints is down, Adani Enterprises as well as a Hero Moto which are trading under pressure. Let's quickly look at components in terms of Bank Nifty as well. All 12 are advancing in trade. You have Bank of Baroda, Bandhan Bank, PNB, SBI as well as an IndusInd Bank. These are a few of the top gainers in terms of Bank Nifty as well. Talking about broader markets, let's pull up the mid cap as well as the small cap index and see what's happening on that front. If you see in terms of where the mid-cap index is concerned, Nifty mid-cap seeing gains of around 0.7 to 0.8%, as well as if you see in terms of the small-cap index as well, 0.5% up move coming in there. So pretty much in line with what the benchmarks are doing. What about the newsmakers? Because that's going to be an interesting one to watch out for. And from a market's perspective as well, a lifetime high is where we are looking at. You have HEG, which is seeing smart moves in today's session, 6.5% up move in terms of HEG. Let's pull up a graphite with the HEG as well, both of them from the same industry, and let's see if Graphite Industries is mirroring the same. There you go, 4.5%. If we can have a one-year chart of HEG and graphite and have a comparison between both of them, that will be an interesting one to watch out for, because both of them absolutely mirror what's happening with each other. If you see, there you go, almost 60 to 70% is the kind of up move that we're seeing in the last 1 year on HEG. So there's some bit of uptick that has started to come in. 3M India is seeing some smart volumes in today's session. Coromandel is down around 2.5-3% in trade, and this is on the back of the gas leak that we have been talking time and again right now. What Coromandel has come out and said is that they've isolated the ammonia system facility so far, and that's what is causing pressure on that one. And the situation has been brought back to normalcy. The members of the local community are safe, and the abnormality in ammonia unloading subsea pipeline is what they are seeing. This has happened near Chennai, and this was detected on the 26th of December, and that's what is keeping Coromandel International under pressure in today's day of trade. Talking about the cement players as well, as we said, Ultratech Cement, that stock has been upgraded to a buy by Nomura, and they have a target price of 11,500 on the counter, and that's the reason why we are seeing some smart moves on this one. Dalmia Bharat has been upgraded to a buy, and they have a target price of 2,900, and Ramco Cements has been upgraded to a buy as well for a target price of 1,250. They do maintain a buy on Shree Cement with a revised target price of 33,400. So that's with regards to where the cement price is concerned. But moving on, Happy Forgings, that actually listed on the bourses today and at a price of 1,000 rupees a piece. If you see, currently the stock is seeing gains of around 20 to 21% and over its issue price of 850 rupees. My colleague Saloni Kothari caught up with the management and began by asking about how the company plans to utilize the funds and their capex plans going ahead. Let's listen into a bite of that conversation.
As indicated, company is in a capex mode. In the last 4 years, we have doubled our gross block from 600 crores to 1,200 crores. So we've been consistently investing in the capex. Despite of these large capex, today company's debt equity is at 0.2, which shows that we are able to deploy these funds from our own cash. So going forward, as a strategy for the funds that we are raising, we plan to reduce 150 to 170 crores of our debt, and we plan to put balance in the capex. So in terms of debt, probably company will be looking at debt free in next 6 months, because we have a very solid cash accruals within the company as well. And going forward with the growth that we are seeing and with the type of cash that company will be making, again 60 to 70% will be deployed in the business. So we look at a very strong balance sheet with the same numbers going forward as well.
Right, but as you said that the intent is to be debt free in the next 6 months, but since it's a very capital intensive business, and in future if you need certain capex requirements, so would you need to again raise more funds for that matter, or as you were mentioning that your company has strong balance sheet, so you'll be able to fund it on your own?
We can fund it on our own. It's a AA rated company with CRISIL and ICRA, and we can raise funds whenever we can. So we have a very strong balance sheet today. In terms of our payables, it's like almost 20-25 days. So we literally buy everything on cash. So we have full flexibility. If we want to raise funds, we can do that anytime.
Right. And how has, in terms of this financial year been? Because I understand that you cannot give out the numbers, but just to give a sense and a flavor of the previous 2 quarters and the next 2 quarters, and what, if any guidances or any targets that you have in mind.
So in terms of top line, company has grown at a CAGR of say 17-18% in terms of in the last 10 years or in the last 5 years if you look at it, including COVID years. And in terms of EBITDA growth, we have grown at a CAGR of 24-25% in the last 10 years, and certainly in the last 5 years as well. So the EBITDA growth has always been better than the top line growth because of the mix that is there in the business now, and the machining business which is kind of improving year on year. It's already 85% now, and the machining content is improving, and that's kind of leading to the improvement in EBITDA per kg. So going forward as well, in terms of guidance, probably we should be looking at a top line growth of 17-18% on a CAGR basis, but in terms of EBITDA growth, I think there'll be upwards of 20% going forward.
Right. And as you mentioned, it's a mix that the business that you have. Can you help us understand what the revenue mix is and which exactly contributes to how much in your revenue?
So we have approximately 40% coming from commercial vehicles, around 30% coming from farm equipment, around 14% from industrials, and balance from off-highway sector. So industrial business is picking up for us. It was 3.7% last year. It has already picked up to 13.7% in H1 of this financial year. So going forward, we see industrial business to be in range bound between 18 to 20%. And at the same time, we look at other sectors growing as well. But because of the growth, because of the better growth in industrials, we see other sectors probably in a range of 30-35%.
Right, so that's with regards to where happy Forgings go. But moving on, we are at the last couple of trading sessions of 2023, and it's the best time to highlight the multi-baggers of 2023. One from the railway stock is a Titagarh Rail. Clearly, if you go to see, the stock is up nearly 2.2 times in 2023. Recently, they've bagged a series of metro rail orders, and the order book stands at little over 28,000 odd crores as of the end of September 2023. My colleague Agam Vakil speaks to Umesh Chowdhary, the VC and MD of the company, on their execution plans and what's in store for 2024. Let's listen into that conversation.
Well, we are in conversation with Umesh Chowdhary. He's the VC and MD at Titagarh Rail Systems. Mr. Chowdhary, thanks for joining in. And of course, in this case, we are talking about the many stocks which have in fact done very well through the course of the year, and yours one of them. I want to start off by talking about the recent fundraising that you have taken up, and we've had many investors who were in fact interested, and they have also picked up stake in your company. What is the thinking process as far as these investors are concerned? What are they seeing in the company? And this is of course your point of view, I understand that, and what are the reasons why they have in fact picked up stake, and what lays ahead in the long run for the company like yours?
So thank you very much for having me with you on your show. It's a great pleasure. In terms of the investor interest in our company or in our sector, I think it is to a great extent to do with what the India story is. And, the way India's story is booming, the way Indian Railway is spending on building capacity, on utilizing capacity, combined with the policies of Make in India and Atmanirbhar Bharat, the entire paradigm of the manufacturing sector has actually undergone a big shift. And companies like ours, which have been in this space for quite some time and have grown continuously on our capability, on our capacities, on the technological aspect. We are very well positioned to really be a part of this entire ecosystem of Make in India, of Atmanirbhar Bharat on one side, and of the infrastructure growth on the other side. So that is actually what has brought in the interest of all the international investors or the domestic investors in companies like us.
Right. So from what I understand is that your current operating capacity is about 600 to 700 wagons per month. And if I'm not mistaken, the target here is by the end of this financial year, you intend to take it to 1,000 wagons per month. Are you on track for this? And if you could give us an idea on what the plans are in store for as far as FY25 is concerned as well, given the kind of order flow that you've already seen at the moment.
So yes, absolutely, we are on track that within this, before the end of this financial year, we should be able to get to 1,000 number per month. And in FY25, that's what our kind of target is, to stay at 1,000 wagons or near about 1,000 wagons per month. Of course, this is based on the current requirement trend of the Indian Railways. But the beauty of this industry at this point of time, of the Indian ecosystem at this point of time, is that it's very dynamic. And with the current plans that the Indian Railways have announced, we believe that 1,000 wagons per month would be the right capacity to operate at. But if the Indian Railway changes its plans and grows further, then of course we will have a look at it. But as of now, our plans are to stay at 1,000 wagons per month on the freight side. And on the passenger, of course, we are growing substantially. So we are, over the next 2-3 years' time, we will develop a capacity to do up to 72 coaches per month from an existing level of maybe 3 to 5 coaches per month.
Right.
And that would be that would be a big jump that will be rolling out in the next 2-3 years.
Right. So we also understand that the company is taking up backward integration in this case. Can you tell us a little more in terms of the plans for this? What kind of products are you looking at least initially? And secondly, down the line, when it comes to your order books, how much of that could potentially come from this specific line of expansion that you're looking at?
So as far as backward integration is concerned, we are looking at 3 aspects primarily. One is whatever eases our supply chain. Second, whatever improves our EBITDA margins substantively. And 3, whatever gives us an aftermarket, because our one of our business strategy, which we have already achieved to an extent by way of the Vande Bharat contract that we won in consortium with BHEL, is to get into the after-sales service. So we have a full maintenance contract for 35 years for Vande Bharat. So basically the entire backward integration component ecosystem that we are looking at will be driven by these 3 drivers that we are working upon. And in terms of the products, we have already announced our backward integration for the propulsion equipment systems and the TCMS. We've already started setting up the wheel project in partnership with Ramakrishna Forging. So with all of this, these are some of the examples of the backward integration into the component business. And there will be more to follow, and we will come back and announce them as we kind of finalize the plans for any one of them.
Right, so that's with regards to Titagarh wagons, clearly indicating that 1,000 wagons per month by the end of FY24 is what they're looking at, and they plan to scale it up to 72 coaches per month as well going ahead. They're adopting backward integration to improve the supply chain and margins going ahead. So that's the management of Titagarh wagons. But let's quickly slip into a short break. On the other side, we will speak to the management of Asian Granito with their plans with regards to foray into the sanitaryware segment and what it means for the company from here on. Please stay tuned till we return on NDTV Profit. Welcome back. You're watching the small and mid-cap show. Asian Granito, that stock is in focus, gained over 50% in 2023. They forayed into the sanitary ware manufacturing segment and raised also 441 crores via rights issue. For this, to discuss the plans going ahead, Mehul Shah, CFO at Asian Granito, joins us. Mehul, good morning and welcome to the show.
Good morning, ma'am.
Mehul, my first question coming to you is, overall, if you see in terms of the sanitary ware segment, the new plant that has started operations, what is the capacity and what will the utilizations initially look like?
Yes, recently in the month of October, we have started this plant with a capacity of 0.66 million pieces per annum. And since last 2 months, the capacity utilization is around 40 to 50% as of now. See, if you look at the sanitary ware market, it is very unorganized market. And after the entrance of the organized players, this market has become the second largest market of the Asia. As you may be aware that we are already into the tiles manufacturing business, and our marketing and logistic is already set for the tiles manufacturing. We thought of leveraging this network for our sanitary ware business. So that's why we have decided to foray into this sanitary ware business.
Right. Now, overall, what's the revenue that you're planning to garner from this plant at peak utilization?
So our plan is to, at peak utilization, we will reach of a top line of around 400 to 500 crores in a short to medium term. It may be within 4 to 5 years horizon.
Right, so you're saying 400 to 500 crores from the sanitary ware business is what you're seeing at peak utilization?
Yes.
Okay. And with this, currently in terms of FY24, what's the revenue that you're looking at? And FY25, how much will it be?
See, last year, if you look at our 23, we have consolidated turnover of around 1560 crores. So what we are looking at is around 10 to 15% growth over a period in the next financial year. And going forward, we will also maintain this growth momentum.
Okay. Mehul, in terms of between third party and own manufacturing, does this mean that sanitary ware has completely shifted to own manufacturing and there will be nothing done by third party?
No, we will continue both the models because we are already doing this third party outsourcing work since last 2 to 3 years. So once our productions and every manufacturing is settled down, till that time we will use this third party. And we will try to increase our top line by remaining in both the models.
So how much of your revenues for sanitary ware will come in? How much of the manufacturing will be done by third party and how much will be own manufacturing?
See, our initial turnover from this outsourcing is very small. It is roughly around 50 to 60 crores as of now.
Okay. And that is what it will continue, right?
Yeah.
Okay. Apart from this, if you see the tiles business as well, what's the outlook looking like and how do you see the revenue mix between sanitary ware as well as, the other part of the business look like?
See, as I told you, we have done around 1600 crore top line last year from the overall all the businesses. We are looking at 10 to 15% growth over this current financial year. And the outlook for this financial year is looking not that great, but what we see is going forward from the next financial year, that is 24-25, we see a lot of push into this business, this segment, because what we are seeing is that real estate is doing quite well since last couple of years, and we see that this real estate move will continue. Plus, there are a lot of urbanization that is going on, and in this sanitary ware particular business, the people are always looking for change. So we always see the demand in this sanitary ware business.
Okay, and overall, if you see in terms of, 87% of the revenues come in from the tiles business, right? So, and sanitary is just 2% right now. How much will sanitary ware start to contribute in the next 3 to 5 years?
So we are seeing it, at least it will start contributing around 10 to 15% from the overall top line, apart from tiles and the marble and quartz business.
And how much time will it take to come to 10 to 15% revenue contribution?
It will be roughly around 3 to 4 years.
Okay, and overall, if you see in terms of the raw material price trend as well, gas prices, other raw materials, how has the trend been? Because gas pricing is one of the major things that everyone watches out for.
Yeah, since the war between Russia and Ukraine, the prices are very unstable in such, and it has increased a lot if you look at the last financial year. But now I think it is more or less stable and it is equal for all as far as the Morbi manufacturers are concerned. So now what we are seeing is stabilizing in the price and stabilizing in the demand in a next, you can say, 6 to 9 months period of time.
Okay, and will that anywhere have an impact on margins?
See, if you look at our sales portfolio, we are almost 75 to 80% we are selling through our trading portfolio as of now. So our margins are definitely shrink because of that, and that's why we have come up with the couple of new plants, plus we have made some necessary changes in our existing plants also, so that we can increase our manufacturing portfolio to a level where our margins are also improved over a period of time. Okay. So that's a strategy on which we are working on.
Okay. And with regards to where demerger of AGL is concerned, what is the status? How are you looking at it?
See, we are doing some outsourcing purchase from this manufacturer, and we wanted to bring that all manufacturer under the umbrella of Asian Granito, you can say AGL Tiles. So that's why we are come up with this demerger. So whatever the facilities and everything is available, that will come under the umbrella of Asian Granito. And this demerger is as per the plan, it is as per the schedule, and it is with the statutory authorities for the approval purpose.
Okay, and what are the timelines you're looking at?
See, it is very difficult to put a number on this because it depends on the various statutory authorities to approve it. But what we are looking at is a 6 months to 9 months timeline from now on.
Okay. And overall, if you see in terms of international business goes as well, what's the outlook on that front? Because clearly that's a journey that you have embarked on as well. You are foraying and increasing presence. So what is that business expected to look like, and how much do you think it will contribute to the top line?
Yes, see, currently our export contribution to the overall top line is around 15%, and we are exporting to around 100 countries as of now. And the targets that we have taken is to double that top line contribution of the export market. So initially, recently we also set up some subsidiaries in US market. We are already into the Sharjah market, that is Dubai, GCC countries. We are also coming up with some wall tiles manufacturing unit in Nepal. So that's the steps that the company is looking at to increase its presence internationally.
Right. And Mehul, overall, from a company's perspective, what's that key milestone that you want to cross or achieve? Because clearly from a trend, we've seen the company have revenues in that range of 1,300 to around 15 to 1,600 odd crores in the last 3 years. If you have to look at 21, 22, 23, what would it look like from here on? And number two, when can we be back to that 11, 12% double-digit margin? Because now we've already gone down to 5%. I know you did mention that you're taking a lot of steps to improve margins, but when do you see that?
Yeah, see, the first question is regarding the top line. So immediately after this demerger, we are looking at a top line of around 2,500 crores, because lot of businesses will come under the umbrella of Asian Granito. So once the demerger happens, we will be reaching at around 2,500 crore, maybe in next financial year or maybe next to next financial year. And we are looking at a target of around 6,000 crore by 2030 as far as the top line is concerned.
Okay, and in terms of margins, where do you see it, and will we be profitable this year?
See, as I told you that we are moving from our trading model to the manufacturing model, as we have done a couple of right issue from which we have set up some manufacturing units in Morbi. So our manufacturing portfolio will increase in the coming years, so which will also increase our margin profile. So what we are looking at around 40-45% contribution from our manufacturing segment. This will also result into our overall improvement in the margins also.
And very quickly, will we be profitable this year?
So this year we will be at a standalone level. We are already, if you look at our last 6 monthly result, we are already into the profits. And this, I think, this trend will continue in this financial year also.
Right. All right, Mehul. Thank you so much for speaking to us at NDTV Profit. We're completely running out of time, but good aspects that we're picking up from here on. So that's the management of Asian Granito. 50% up move is what we've seen on a YTD basis. Completely out of time. That's all that we have on this session of the Small and Mid Cap Show. Thanks for watching, and please stay tuned to NDTV Profit.